Welcome to the Deep Dive. Today we're cracking open the latest results from Allied Blenders and Distillers Ltd, ABD.
Right, they're the largest domestic spirits company in India by volume, so definitely worth watching.
And we've got their Q2 FY26 unaudited financials, press releases, investor decks, basically the full picture.
Yeah, and our job today is to, cut through the noise and give you the key takeaways from all that material, what's really driving their performance.
And the big theme, it seems, the jumping out from everywhere, is this idea of accelerated premiumization.
Mm-hmm. And margin expansion alongside it. They're not just selling more, they're selling, well, better stuff and making it more efficiently.
Exactly. It's about reshaping the portfolio.
And maybe the best headline number to capture that is the profit. This is their fifth straight quarter of profit since listing.
Right. And profit after tax, the PAT figure, was up. What was it?
32.3% year over year for Q2 fiscal 26. Pretty strong.
That's definitely, eye-catching growth. But like you said, it's about how they're growing. It's not just market size. It feels strategic.
It absolutely does. If we look at the main scorecard for Q2, the consolidated numbers, you see growth, but also that efficiency coming through.
Okay, so let's start at the top line. Income.
Income from operations, nearly 1,000 crore rupees. 995 crore to be exact. That's up 14.4% compared to last year.
Okay, solid growth. But the next line down, EBITDA.
Yeah.
That tells more of the margin story, right?
Exactly. EBITDA, that's earnings before interest, taxes, depreciation, and amortization. It was up even more. 23.6%, hitting 130 crore.
So revenue up 14%, EBITDA up nearly 24%. That difference really points to the margin improvement.
Precisely. The EBITDA margin itself climbed to 13.1%. That's an increase of 98 basis points year over year.
Almost a full percentage point gain, which, for anyone listening, in a high-volume business like spirits, that's a really significant jump in operational efficiency.
Huge. It shows real operating leverage. And it's not just a one-quarter blip either. Looking at the first half, H1 FY26.
Right, the 6-month
PAT for the first half was up 102% compared to H1 last year. Hit 119 crore. So the profitability isn't just there, it's accelerating.
So how are they doing both? Growing volume and getting better margins?
Yeah.
What's the mechanism?
Well, fundamentally, they're getting more money for each bottle, or rather, each case. Total volume sold was up 8.4%. That's 9 million cases in the quarter.
Okay, so more volume.
But crucially, the average price they got per case was also up by 3.8% to 1,037 rupees.
Ah, okay, so volume up, price per unit up.
Yeah.
That screams mix shift, doesn't it? People buying the more expensive stuff.
Exactly. Which brings us right back to that core strategy. Premiumization, the push towards their prestige and above segment, or P&A.
Right. That's where the better margins generally are, but it means convincing consumers to trade up, which isn't always easy.
But the numbers suggest they're making real headway. P&A volume grew, wait for it, 28.8% year over year in Q2.
Wow, nearly 30% growth in just the premium segment volume.
Yeah, hitting 4.3 million cases. But here's the really telling part, the salience. What percentage of their total sales does P&A represent now?
Okay, the mix itself.
P&A volume salience jumped to 47.1% in Q2.
Up from, what was it last year?
Around 39.7% in Q2 FY25. So that's a huge shift, almost 8 percentage points of their volume mix moving upscale in just 1 year.
That's really fast. It feels like a deliberate reshaping of the business.
Absolutely deliberate. It means nearly half their volume is now in these higher margin categories. And if you look at value sale, how much revenue it represents, it's even higher, 56.9%.
So more than half their revenue comes from less than half their volume. Makes sense.
And their stated goal is to get P&A volume salience to 50% by FY28. They look well on track, maybe even ahead.
Is there one particular brand doing the heavy lifting here, driving that shift?
The sources point heavily to Iconic Q White Whiskey. They call it the fastest growing millionaire spirits brand in the world for the second year running.
A millionaire brand, meaning it sells over 1 million cases a year, right?
Correct. Iconic Q White hit 5.7 million cases last fiscal year. It seems to be hitting that sweet spot, attracting consumers moving into the premium space for the first time.
Interesting. But ABD's history, their foundation, is really in that mass market segment, isn't it? Officer's Choice is huge. What's happening there while P&A booms?
That's a really important point. The mass premium segment, yeah, led by Officer's Choice, it still holds its market leadership. And crucially, it delivers a gross margin over 40%.
Ah, so it's still very profitable.
It's the bedrock, you could say. It provides stable profits and, importantly, the cash flow needed to fund all this premiumization and investment.
Okay, that makes sense. So the mass market funds the transition to premium. Let's talk about those investments then, the future-ready transformation plan. This seems to be about locking in those margins for the future.
Exactly. This is where they connect today's sales growth with tomorrow's sustained profitability. They've got a big 525 crore backward integration program.
Backward integration meaning taking control of the supply chain, making things themselves.
Precisely. Making their own inputs rather than buying them. And the goal is explicit. They want to boost gross margins by about 300 basis points.
3 full percentage points. By when?
Over the next 2 to 3 years, targeting FY28 for the full impact.
That's incredibly ambitious in the spirits industry. Margins are usually pretty tight. What's the first big piece of that plan they've actually finished?
That would be the new PE bottle manufacturing unit. It's in Rangapur, Telangana. Cost about 115 crore rupees.
PT bottles. So plastic bottles, essentially.
Yeah, for many of their volume brands, it just got commissioned in September 2025. And the capacity is massive, over 600 million bottles a year.
Wow. And the idea is making your own bottles saves money compared to buying them.
Yes, saves on the bottle cost itself, probably saves on transport, gives them quality control. The filings say it's EBITDA accretive from day one.
Meaning it starts adding to profit immediately, basically covering its own costs, and then some, right from the start.
You got it. Instant margin help.
Okay, so that's packaging. What about the actual liquid? The filings mentioned ENA capacity expansion. What's ENA and why is that important?
ENA is extra neutral alcohol. It's the fundamental base spirit for, well, most spirits, especially things like whiskey and gin.
Ah, the raw alcohol itself.
Pretty much. Controlling your own ENA supply is vital. It means consistent quality, which you need for premium brands, and it protects you from fluctuating market prices for alcohol. Big margin control lever.
And they're expanding that significantly.
Big time. A 61 million liter per annum capacity expansion, MLPA. That scale shows how serious they are about controlling production end to end.
Supports the premium push. Makes sense. And then there was something even more high-end mentioned. A distillery.
Yes, this is quite exciting. They're building what they call India's first single malt distiller, expected to be running Q4 of this fiscal year, FY26.
Single malt. That's definitely aiming high. Capacity.
Around 4 million liters per annum. It's a clear statement about moving into the sort of top tier of quality perception.
Okay, so lots of domestic investment. But the reports also mentioned global expansion. Is that a big part of the strategy too?
It seems like a quieter but strategically important piece. They've upped their international presence, now in 30 countries. That's up from 23 just last fiscal year.
And why focus on exports? What's the benefit?
Couple of things. It's generally asset light. They don't need to build massive infrastructure everywhere. But the key thing, profitability.
Better margins internationally.
Significantly better, apparently. Around 1.3 times the profitability of the domestic market.
Why such a big difference?
Mostly avoiding the really complex web of state-level taxes, regulations, and distribution hurdles you have within India. Plus, the working capital needed is much lower, about a third of domestic, so it's efficient growth.
Right, makes sense. Okay, let's pivot slightly to ADD Maestro. That's their division focused specifically on the super premium and luxury end, right?
Correct. This is where brands like Sterling Reserve B7, Woodburn's Malt, Pumori Gin sit, high margin, high focus.
And they're not just making this stuff, they're marketing it heavily too.
Oh yeah. The filings detail this big nationwide campaign for Sterling Reserve B7. So smooth, must be magic.
I think I saw something about that. They use a cricketer.
Yeah, Shreyas Iyer apparently generated over 100 million digital impressions. It shows they're really pushing for visibility at that premium level.
And they've also moved into duty-free retail. That seems important for a luxury image.
Absolutely critical. They've opened up in duty-free at Bengaluru and Delhi airports. That's prime real estate for reaching international travelers and, image-conscious domestic flyers looking for premium brands.
But image needs substance. Did the filings mention anything about, quality validation, awards, maybe?
Oh, they definitely highlighted the awards. This seemed like a big point of pride and validation, especially from the Concours Mondial de Bruxelles 2025.
Okay, what did they win there?
This is pretty major. Their Woodburn's Contemporary Indian Malt Whiskey got a grand gold medal. But even bigger, it was named Best Revelation Blended Whiskey of the Year.
Wow. Revelation blended whiskey. What does that signify?
It signifies a non-Scotch whiskey breaking through and winning a top global award, usually dominated by traditional players. And they stressed it was the first time an Indian whiskey received that particular distinction.
That is huge. Not just for ABD, but for the perception of Indian whiskey globally. Challenges the old idea that it's all just mass market stuff.
Exactly. It's a powerful proof point for their quality claim. And it wasn't just Woodburns. Their Pewmore Gin got gold. Artheus Blended Malt Scotch got silver at the same event.
So broad recognition across the luxury portfolio.
And the company itself picked up Company of the Year Domestic at another industry event, the Spirits Awards. So the momentum seems recognized.
Okay, so strong performance, clear strategy, investment awards. Before we conclude, we absolutely have to address the legal side.
Yeah.
The audited reports have specific disclosures on contingent liabilities. We need to cover those impartially.
Yes, absolutely essential for a full picture. Two main items stand out in the notes. First, a dispute with the CSD.
CSD being the Canteen Stores Department. Big channel for alcohol sales in India.
Correct. Crucial channel. CSD has raised a demand against ABD for about 3,398 lakhs net. It relates to differential trade rates from way back 2012 to 2017.
Okay, what's the status?
Well, ABD rejected the claim entirely. They've invoked arbitration. And just this quarter, the Bombay High Court appointed an arbitrator. Importantly, management states they believe the chance of actually having to pay is remote based on legal advice.
All right, so one dispute in arbitration. What's the second major item?
This one's bigger, involving the Income Tax Department. There was a search operation back in December 2023.
Right, I remember reading about that.
Following that, the IT department raised a pretty substantial demand. It totals 35,231 lakhs in tax liability, plus another 24,914 lakhs in interest.
That's a very large number. Potentially a massive hit to the financials under normal circumstances. What's the situation there?
Okay, two key things mitigate the immediate financial impact. First, ABD has filed appeals against the demand. Second, the IT department itself has stayed or paused collection of 90% of that total demand while the appeals are ongoing.
Okay, so 90% is on hold. But what about the potential remaining impact if the appeals don't fully succeed?
This is the crucial part mentioned in the filings. The promoter chairman has given a personal assurance.
An assurance to do what?
To personally cover any final financial impact on the company that might arise from this tax litigation if the appeals ultimately fail.
Wow. So the chairman is personally backstopping the potential liability.
That's what the disclosure states. It effectively aims to insulate the company's balance sheet and P&L from this specific large contingent liability.
What does that signal? Is that common?
It signals enormous confidence from the promoter in the company's case during the appeals. It's not unheard of, but it's a very strong signal meant to reassure investors and stakeholders that this issue, however large the initial demand, won't derail the company's plans or financials. The company's legal view is that their chances are fair, suggesting the demand might not hold up.
Okay, that's important context on those legal matters. So bringing it all together, what's the main takeaway for you, the listener?
Well, it looks like a company executing a very clear strategy. You've got this twin focus, driving growth through premiumization, getting people to buy higher value products.
And at the same time, investing heavily in backward integration, making your own bottles, their own alcohol, to protect and expand margins over the long term.
Exactly. The financial results, that double-digit PAT and EBITDA growth, show the momentum is real right now.
And the path forward seems quite defined too. They're targeting mid-teens revenue growth and aiming for a pretty significant 17% EBITDA margin by FY28.
Yeah, and the investments they're making today, like that PE plant coming online, the ENA expansion, these are concrete steps designed to lock in those future margin gains. Plus, the awards suggest the premium products have the quality to back up the strategy.
Which leads us to our final provocative thought for you. The source material mentions, almost in passing, that the potential UK Free Trade Agreement, the FTA, could boost margins further. Specifically because ABD is a big importer of bulk Scotch whiskey.
Right, which they use in some of their premium blends.
So the question is, if and when that UK FTA materializes, how exactly could it turbocharge the growth and profitability of ABD Maestro's super premium brands? Thinking particularly about things like Artheus Blended Malt Scotch, which relies on those imported components, could the FTA significantly change their competitive edge and pricing power right here in the Indian market?
Yeah. How much more competitive could those high-end Scotch component brands become? Something to definitely think about as that trade deal potentially moves closer.